course, it has the company favorite, Casamigos in there.
Hitting that trade between multiple platforms. And so this is how we really saw Bitcoin and a lot of cryptos become very liquid instruments, is because of the arbitrage. Figuring out, okay, I knew that I wanted to run a business. I knew that at some point, I was going to be building big companies. And so it was like, okay, well, if I can't get the experience necessarily today in how to run a large conglomerate because I don't have the tools to do that, I can at least figure out what other people are doing successfully and what they're not doing successfully.
And with that said, on the security token market, you guys have had tremendous news coming out of there with, I think, over 5-6 million pledged in one of your equity crowdfunds. How is that going?
Welcome to my block. I'm John Pittman, the token advisor, but I'm also a bartender at one of the hottest spots in Miami. Here, I welcome guests from around the world to open a tab and hang around for a cocktail and some conversation.
We out here.
What up, baby?
How you doing, bro?
Chilling, baby. Chilling. Welcome to the block.
Thanks, man. Good to be back, Mox.
Yeah, it's always a good time at Moxie's. Appreciate you pulling up on Open Tab. It's a pleasure. Well, when I first started working with the company, we had a trip out to South Africa, and while we was out there, we drank a lot of apple stuff. We had apple ciders, we had apple teenies. We also had tequila. So with that said, I got a nice drink for you.
Whip it up, bro. Let's do it.
Since we're here in Brickell, I also had to give it a Brickell name. So this right here, calling this the Brickell Sour Apple. Of course, it has the company favorite, Casamigos in there. It's all right, right?
Oh,
it's all right,
okay.
Right? It's all right, right?
I like that.
Yeah, right? It's like I always like using like little fruit to kind of get us started in our day since we film these interviews in the morning.
Of course. You gotta have a little fruity when you're starting the day at 8 o'clock, drink some tequila. It's only in Miami.
Honestly, it's like as a bartender, when you try to get people's feet wet, you kind of got to give them some little sweet. Then after that, I get a little heavier on the hand. Right. And then by the fourth drink, we're taking shots.
That's what I'm saying.
That's how you get a party started.
Maybe at the end of the episode, we'll figure it out.
What we'll do. Well, speaking of getting the party started, let's get this party started. To introduce you to the world, Kyle, CEO of Security Token Market. You know what? But I want to know the backstory though. I know you're Philly, born and raised.
Yeah.
I know you know how to play basketball. So I want to know, how does all this collide? And now you're working in finance and blockchain.
Sure. Yeah. I grew up outside of Philadelphia in Doylestown, Pennsylvania.
Yeah.
Was there, growing up in high school, and back in those days, I was really just trading stocks, doing a lot of that kind of stuff. And I fell
in high school?
Yeah. So for me, it was just about understanding how business worked. And I liked looking at stocks because for me, looking at how big businesses had a direct price indicator, which was their stock price, based off of how they ran their business, right? So over months or years, you could see the direct result of a business decision based off of how the stock ended up performing. So it was a good indicator for me to learn a little bit more.
Were you like looking at the stock prices and then going into the business operations and trying to figure out what you could, and then from there find those little minor correlations, and that's kind of how you educated yourself?
That's really what I was using it as, was a good indicator. And so it was really about figuring out, okay, I knew that I wanted to run a business. I knew that at some point, I was going to be building big companies. And so it was like, okay, well, if I can't get the experience necessarily today in how to run a large conglomerate because I don't have the tools to do that, I can at least figure out what other people are doing successfully and what they're not doing successfully so that I can learn from that. And so I was doing that for a while. on the side, I was also really interested in the technology and behind electric vehicles, and I really got specifically pulled into artificial intelligence.
Okay.
Because for me, it was just fascinating to see how a lot of these algorithms work, a lot of how the underlying plumbing of the internet and a lot of the platforms that we like to interact with any day, how that stuff actually works from a really deep.
Was it the 100-time multiple that you probably thought the AI would have that brought you into it, or were you actually the science and the technology that really brought you to it?
I didn't know much about revenue multiples at the
okay.
time. It certainly worked out okay from that fact. But I think for me, it was more about just trying to push the limits of really how I understood how the world worked, right? Understanding that, wow, there's some of these invisible forces through technology that we really don't consider on a day-to-day basis that shape so much of the world that we live in. So whether it's the stock market, I mean, most of that's quantitative and algorithmic trading at this point, whether it's social media and everything, where everything you're pretty much being shown in your feed is being dictated by a larger algorithm. And then, of course, everything else alongside it tends to be how I try to think about my life, so the setting mental models and then scaling it, which made a lot of sense to me.
And so all this was happening in Philly. Crazy, right?
I was doing it in Philly, and then I came down to Miami for University of Miami, UM. And while I was here, that's honestly where I started to fall into the blockchain space. Because for me, I was actively investing both in the public markets as well as into the crypto space at that point. I had been interacting with blockchain or crypto more specifically over the last couple of years when I was in school in Philadelphia, but most people back in the day, you didn't take it super seriously just because it was kind of really a game.
Was it the college campus that kind of brought you closer, or was it you just kind of taking your own deeper dive in itself, or was the city already starting to adopt this mindset as it has right now? The city?
It was the city for sure. I was at school, but I was here for the Bitcoin Miami conference.
What year was that?
This is 2017,
Okay.
I think, something like that. And so I was invited to come out by one of the head sponsors here, and they were actually based in China. And so most of their team that was here, they were platinum sponsors, they were doing all kind of speaking stuff, and there were thousands of people showing up to the event, and they didn't know English incredibly well. They weren't super confident with the language and with the culture, and so they brought me on essentially as the guy that would really talk about blockchain and deeper technologies in the more Western cultures, which led me to travel around the world talking about how result delegated proof of stake and a lot of these deeper consensus mechanisms, how they actually work and how they scale as blockchains build and scale themselves, which has a lot of fundamentals in a lot of the early technologies I was already researching, so I felt decently comfortable. And then again, a lot of the blockchain space back in the day was building strong networks. And
so I guess you have to regurgitate this information that you had. I'm guessing that brought you stronger to the information and things like that.
That's exactly right.
And ultimately, I see that you guys have, you ended up meeting Herwig at school, and you guys ended up starting a security token show. Is that ultimately how you got closer to security tokens as well, or how did you start? How did you get into this industry?
100%. No, so I was at the time when I had met Herwig, I was in school. He was not, and so we were familiar with each other through our network. We both worked at a startup consulting organization called the Launchpad at University of Miami. So we were in a similar network of entrepreneurs, which especially back at that time, Miami Tech wasn't necessarily this burgeoning group. It was a closer knit, it was a much smaller group of individuals. So especially two young guys that were working in blockchain and doing a lot of this cool tech stuff, there weren't that many people to know. And so Herwig actually was the one that really brought me into a lot of what I know around security token regulation, around securities laws. I was, again, familiar with a lot of the market's infrastructure because of the fact that I had been trading for years, and I was certainly very familiar intimately with the underlying blockchain technology. But understanding exactly how that compliance layer fits into the whole puzzle was something that we worked together on a different project I was working on. And after seeing his success with a few other clients here locally, it made all the sense in the world. And since then, the rest is history.
So I know he comes from a compliance background. You're saying you come from pretty much his data stock background. What is that perspective like when looking at security tokens?
It's fascinating because you have so much upgrades to the traditional plumbing that in and of itself is revolutionary, right? When you're talking about 24/7 trading alone. This is something that's still incredibly novel. Like only a few years ago, literally, there was only trading between that 9 to 4 period.
Why is that?
It's an old thing because it's manual entry.
Okay,
like
you
back
had to
in the
go
day,
home, huh?
literally, the stock market used to be closed every Wednesday. just because they used Wednesday as the day to deliver the paper shares from one stock exchange or one broker to the other. They used to literally shut the entire market down Wednesdays just because that was the day to deliver all of the paper.
Right.
Obviously now we don't need to close Wednesdays, but they still need to close at certain times so they can settle up all the books.
Right.
Again, something incredibly antiquated, especially when you're talking about global 24/7 internet markets. Everything moves at that speed. And then of course there's still aftermarket and after hours trading for dark pools, liquidity pools, and a lot of the investors and institutions that retail doesn't have access to, which again kind of adds to that disparity between the current markets.
What are the full benefits of trading 24/7?
So I think that alone just makes it a much more complete market when it comes to coverage around the world. There are so many large financial centers that just don't operate on EST, and it's impractical to think that they would, that it kind of excludes them, right? If 9 to 4 for a majority of that, it's 1 to 6 a.m. or something like that, that's not going to be a very productive time for you and your firm. So of course you need to rely on your own stock exchange, which then operates on your own hours wherever you are around the world. But now you've created 2 separate sources of liquidity, right? Now you've got investors that are only trading on this Southeast Asian stock exchange or something like that, as opposed to having both of those exchanges in one where we can all provide and participate in the same system. Like even I remember back in the day, if you remember Samsung phones, they had that battery that it caught on fire when it was charging or whatever.
Yeah, they wouldn't let you on a plane for a certain period of time.
Yeah, you remember that? So that caused the stock to really drop. And I felt like it was probably an overreaction. So I remember when I was trading stocks, that was one that I was targeting and trying to figure out exactly how to take a position. And the Samsung stock trades on the South Korean stock exchange. And I actually remember not purchasing the stock just because it was complicated and I wasn't actually able to immediately figure out where to acquire it. And maybe that's part of the difficulty and maybe where some of the alpha or that investment profit comes from. But at the same time, that actually excluded me. As a US investor, I wasn't able to figure out how to get it in a short amount of time and move my attention to a different investment instead. Right. So that's a great, tiny anecdotal microcosm of what happens here when you have fragmented markets. Think about it the other way. How many international investors would love to buy US assets that just can't because
would love to sell
reason.
them and they can't find the proper buyers
Exactly right. So that's kind of where the 24/7 trading means less about the actual hours for me and more about just global inclusion, which I think just, again, if 3 billion people around the world have Facebook, all 3 billion should in theory be able to buy Facebook stock. And Facebook would want that, right? Because they want more investors to buy their shares. Their current investors want that because they want more people to sell to. The price is probably going to go up. And the new investors want it because they want access to that stock. And so that kind of global market, I think, promotes financial equality. It promotes a healthier economy because it's less reliant on just the US market. It's more about the whole world and where the demand is. So it creates, hopefully, an even more stable system and drives more liquidity for every one of those assets.
That's beautiful. So I know you guys preach that blockchain could help fix this. What infrastructure is blockchain bringing to this system, I guess, to alleviate this problem? How is it doing that?
So there's two main components to it. One of them is psychological and one of them is really technical. So the technical one, I think, is certainly the one that people are familiar with in the sense that blockchain is a technology. So it's going to improve efficiencies in the system in terms of you're going to be able to set up automation for compliance. So if I'm trading a stock with somebody from Europe, for example, we're already identified in terms of who we are and what we're allowed to participate in. And so when we want to trade, we don't actually necessarily need somebody in between to verify that we are who we say we are. We already have that on chain. And then once we can validate that one time, it's really scalable and we can just continue to do business together. On top of that, you see examples like with GameStop where you have maybe more in-depth or more complicated structures in terms of how these things trade, where I may be executing some sort of trade using your shares where I'm borrowing them and making a short position or something along those lines where we're setting up a derivatives contract. And in that situation, if you and I are interacting on behalf of a different trade that I'm making, it makes a whole lot of sense to just track that on chain so that I can't do anything that I'm permissionlessly you're not allowed to do, right? So me making sure that I'm accountable for any assets that I'm trading on your behalf to generate us both some income or something like that, it's valuable to have that locked up so that we can be sure that I'm not going to take advantage of you, you're not going to take advantage of me, and so it just is a more trustless system, but still is more efficient.
I mean, so I'm guessing the blockchain, everything is tracked, everybody knows who belongs to what. Is there any benefit to people knowing who owns individual stocks?
So,
like knowing who every Apple investor is or who every Facebook investor is?
That's exactly right, and a huge benefit for the company itself. So there's unlikely that everyone's going to know who everyone else is, right? It's probably very much more so that Apple would really benefit from knowing who owns their shares.
Right.
So right now, the way that it works literally is that you would go to buy a share of a stock. You'd go to Robinhood or TD Ameritrade or whatever platform you like or app that you like to use to buy stocks, and you would buy that share, and Apple would just find out that Robinhood purchased one more share. Robinhood's not going to share that information with Apple because that's super valuable data that they now have control over, and of course they're not going to give it for free. In fact, they may not give it at all in a lot of cases. Now Robinhood tends to, which is one of their main business models, it's called payment for order flow, which is order flow is what's the user info behind their shares. But Apple would love that information for a couple reasons. One, because they'd know better who's actually buying their shares, which is valuable. Is it men? Is it women? Are they a certain age group? Are they a certain location?
Average investment size?
Average, all of that stuff. You can make a ton of conclusions based off of it, and you could also begin to more tightly align your customers and your investors. Because that's a real situation, and a problem I think for a lot of companies is that the people buying the actual product or driving the revenue of the business are not the same ones that are buying the shares of the company. So therefore you have a disconnect in terms of what the services that the business is providing, as well as how it's trying to position itself for investors, which just contradicts each other. So then they have a worse business model because they're trying to satisfy two different parties with two different sets of interests. Whereas if you can tie your customers to be investors, then you just have to offer a better product and they're going to buy more stock, right? So it makes a whole lot more sense for them to start figuring out ways to align their customers, and it's just something that they can't really do today.
Man, so with this being said, that means we know which investor owns which share and things like that. As an investor, can I take my share and move it around also? Can I custody, maybe move it to different exchanges and take advantage of opportunities in different pricing?
100%. You totally could. We actually already seeing this in the markets. Exodus is a crypto wallet company. They did a Reg A Plus, which allows them to, it's essentially like an IPO, but on a smaller scale. They can raise up to 75 million. So they did that. They raised 75. It was the first Reg A Plus that did the full 75 million. Before that, they could only do 50. So this is the first Reg A Plus, the security token. They tokenized equity in their company. And now it trades on two different markets for two different prices. And that's fascinating from a liquidity perspective. We talked about liquidity and how if you create a token, if you put an asset on the market, you want there to be some trading volume, right? Because that gives investors confidence, and it also allows me to get in and buy if I want to. If there's no liquidity, I might say, hey, I want to buy some shares, but if no one's trying to sell them to me, I'm not going to be able to ever buy any, right? So with Exodus being on two different exchanges, it's powered by that idea of arbitrage, where you have it, you buy it on one for less, you sell it on one for another, and then you take the profit in the middle, which also drives liquidity in the system because there's people that want to buy and sell, and you're facilitating that trade between multiple platforms. And so this is how we really saw Bitcoin and a lot of cryptos become very liquid instruments, is because of the arbitrage. That arbitrage is a risk-free trade in the sense that I don't need Exodus to go up or down as a company. I just need to take it from one place and sell it for more at another place. And so I'm essentially having a risk-free trade and then being able to pocket something in the middle. And so it's been fascinating to see how that's developed already. And it's something that I think is absolutely an exciting opportunity for traditional companies that have already listed on the over-the-counter markets or even NASDAQ that are small cap companies where they're only on one exchange. They feel a lot of pressure from investors or from the exchange itself or any player in between. Having a multiple listing setup could potentially drive a significant liquidity to the asset.
And you know what? This is amazing information. It seems definitely profitable. If somebody wants to track this information, I think security token markets where they get this information.
100%.
How are you guys putting this information and making it digestible? What's the process of that?
So there's so much data in this space, and it's fascinating. So we essentially triangulate three different buckets of information and help an investor make a conclusion around the asset. So the first one is, I think, the most intuitive one, the trading data. right? What is this asset trading at? There's a token, it's got a price associated with it, it has an outstanding amount of supply, so if you take the price, you multiply it by the outstanding supply, you can get the market cap of the asset to start to judge what the size of that position is that's trading on the markets, and then you can get all kinds of other stuff. What was the highest price it traded at today? What's the lowest price it traded at today? A lot of that kind of conclusions that you can make around the financial price of the asset.
Right.
Then you've got the second piece of it. These are blockchain-based assets, so we can now pull blockchain-based data. What is the underlying token created on in terms of the blockchain? What are the wallet holders? There are a lot of transparency that can be provided that maybe you don't know exactly who all the shareholders are, but you can figure out what the concentration of supply is. So is there 4 or 5 people that have 75% control of all of the shares, or is it more distributed than that, right? The more distributed, probably the less volatile because you're not gonna have as much manipulation, but also there's less confidence from any big player, so it could kind of change the tide very quickly, whereas if you have a big concentration, that might give you some suggestion that, okay, these people are in it for the long run, they have really big positions. So there's all kinds of conclusions you can make around the blockchain-based information.
Right.
And then finally, there's the third piece, and this is the key piece for security tokens that you don't necessarily have for crypto or for something else. That's the reference level data. And reference data is really all the legal stuff. So if you issue a security, if you create an investment contract, whether it's equity or debt or real estate, you're gonna be given numbers and tax identification stuff, ISIN numbers, QSIP numbers, anything that you're filing in terms of the documents. You filed a Reg A+, or you submitted a Reg D, or whatever you're using, all of that information is incredibly valuable as well, because that helps the investor know, okay, yes, this is an investment contract. I can see what I'm actually legally entitled to, as opposed to crypto, where you're legally entitled to nothing.
Jeez, man. Yeah. So do you think that the crypto community, that they would be on board security tokens, or are you seeing more of interest from the traditional finance people? Or are we trying to figure out a way to bring them together?
There's definitely an aspect of trying to bring them together, because I think that the value proposition is very different for both sides of that coin. And so when you have, I think with a traditional investor, it's maybe a little bit more compelling because they are already investing in these types of assets. So for them, this isn't necessarily pitching anything new, right? If you are a real estate investor, we have real estate assets that are tokenized that may be interesting to you that you can go to check out. And you're just gonna essentially look at that exactly the same way as you would a real estate investment that you're traditionally used to.
Right.
The token or the blockchain piece doesn't actually change very much in terms of why you would invest in it or how you would invest in it. Potentially there are some differences in terms of the experience in investing, or certainly what you're buying, because you can buy a fraction of an opportunity versus in the traditional markets you might not have that opportunity.
Like the financial structure can get more complicated, basically.
Right,
okay.
right. But it is still, at the end of the day, it's a investment contract. It's the same thing that you would do in the traditional markets. And so for those investors, you're not going to buy it because it's a security token. You're going to buy it because it's a great investment that just happens to be a security token that increases the value proposition, but isn't the sole reason. The same way that you're not going to buy a stock these days because it's an internet company, right? Like everybody's an internet company, right? And then when you look at crypto, it's interesting because the example that we've used in the office for quite a long time that I first heard from Mike Lingle was this fascinating idea of like, okay, people in crypto love buying these blockchains, for example, Ethereum or Solana or whatever, but these cryptos have a centralized foundation, the Ethereum Foundation or the Solana Foundation or whatever foundation or labs, or they've got a lot of funny names, but Uniswap Labs. So those are centralized companies that make money, and a lot of them have raised money from outside investors for equity or for whatever position they've taken. And so a lot of our thesis is like, I think a lot of investors are buying a lot of these cryptos because they're betting on the success of the entire ecosystem. Which starts to sound like, maybe wouldn't you just rather buy a share of that company as opposed to buying this crypto that entitles you to nothing, but it's the closest thing that you can get to the company's shares? Why wouldn't you just buy the shares? So maybe a lot of people wouldn't do that, and certainly in crypto, they're less likely to want to buy the shares because they like the network effects and they like the actual
mobility
blockchain.
in the ecosystem, I guess, is some appreciation of that.
But you have to think that at least a small portion of that, and I can include myself in that, if I could buy a share of this company as opposed to the crypto, I certainly would. And I would certainly consider moving some of my allocation there.
Interesting, man. Interesting. Well, speaking of traditional finance, I know that equity crowdfunding and security tokens, they have pretty much have made a collaboration. And with that said, on the security token market, you guys have had tremendous news coming out of there with, I think, over 5-6 million pledged in one of your equity crowdfunds. How is that going?
It's been a really fascinating experience because crowdfunding is this idea of, okay, no longer do we need to rely on venture capital firms or the really wealthy investors to raise capital and scale a business. Because for a lot of businesses, they're not necessarily positioned to net an investor 100x return. And even if you are in overnight, there's so much leverage in those early stages of that company's operations that you can be taken advantage of by some of these larger investors that have different goals. As we said, separating the customer from the investor. When the investor has a different goal than your customer, it can screw up the product and eventually just screw up the company because you're getting pulled in multiple directions. So with a crowdfund, it's a great way to align the customers and the fans, the people that you have in your network with the business that you're building. Right. And so that's the fascinating part about the crowdfund. The problem for most traditional crowdfunds is that I think the average person doesn't want to hold on to this piece of paper forever that says, congrats, you own the shares. They want to trade it, right? Yeah. They love crypto, they love Robinhood, they love trading these things. They want to see it go up 5 or 10x and then be able to take their reward on that for being an early supporter and early adopter of the business. And so with tokenization, we can really empower and create that secondary market to allow for at least some liquidity on the secondary markets, or at least to help pioneer that idea. So with thousands of crowd funds, I think that this potential opportunity to create a liquid market for the asset post crowdfund is really going to be the most defining legacy of this fundraiser.
But it's also, the liquidity is always an attractive opportunity when, I guess, with tokenization and crowdfunding. Right. But you can also give maybe your token holders some type of benefits.
Yeah.
Have you guys thought about providing the token holders some type of benefits, and what does that look like?
100%. Well, as we talked about, because we now know who the investors are, who your shareholders are, you can very much engage with them on a much more personal basis. We talked about ideas of having conferences where if you're a token holder, you're gonna get benefits, exclusive access, VIP, things like that into the event because of the fact that you're one of our earliest supporters and you're a big investor in the company. Yeah. And so an awesome opportunity. Again, you can't really do that in the traditional markets. We can airdrop in NFTs, do other fun, amazing concepts that just engage the user. We've even thought about creating beta access into our new platforms for token holders. So if you have the token, you are able to enter into the beta access of the platform, potentially invest more effectively or get ahead of anybody else.
Start taking advantage of all those arbitrage research reports that you guys are putting out.
Right, exactly. And or access to analyst reports and things that we've put together. There's all kinds of access that we can create. And that's another huge value proposition to this whole opportunity that we're really strongly considering.
And so as we end up closing out the crowdfund, what are some of the things that you think we would want to use with that crowdfund money, the security token market? I guess, is it to build out this beta platform, or what type of ideas did you guys have for those?
And so with security token market, it's two really strong business verticals. The first one is what everybody's come to love and why we're here today, which is the media side of the company. So we have an amazing office here in downtown Brickell, which is fantastic, but we need a studio. We need to step this game up to the next level. We need to bring our audio and get it crispy. We need to get our green screens going. We need to have permanent setups for a lot of our shows so that we can really start to pump out content at a much more effective level and take it to the highest quality you possibly can. That's going to be a huge focus for us, is really scaling up that side and making it as professional as possible. Then the other side of it, as you totally mentioned, is this idea of how do we build a better tech platform. We've already really begun to overhaul all of our back-end infrastructure and all of our frontward-facing features and everything that everyone knows and loves, but we need to start really stepping that game up, bringing in more data, as much data as possible, starting to building out our machine learning algorithms that are going to start to regress and find correlations against all of the data that we're pulling. And all of these deep tech ideas that require a ton of manpower and a lot of niche skill sets that certainly are not cheap.
Jesus, man. Well, I'm glad I'm working on sales side, but man, thank you for pulling up.
Thank you.
OpenTab is happy to have Security Token Market. Security Token Market is about to kill it. I can't wait for the summer. Cowboy summer, baby. We're out here.
Good to see you, bro.
Same.
Thank you, man.
3 years. Jesus Christ, you're like me.